Good afternoon, traders. It's AJ. How are you? Just want to give a nice recap. It's about 10 minutes to 12. I would like to just kind of give a recap of my opinion, thoughts, and ideas this morning, how I felt the market was going to trade, and how the room traded my particular ideas, what they liked, what they didn't like. I just kind of want to go over my overall feel of the market today. When I woke up, the Dow was up about 390 points. And with that, everything was gapping up pretty much. And I'll show you between the overnights and so forth. So everything was gapping up. So you had Zoom that was gapping up right here from Friday's close. You had NVIDIA gapping up from Friday's close. As you can see, you had Shopify gapping up from Friday's close. Again, standard gap up because the market's obviously gapping up. You had Netflix gapping up, and then you had Tesla gapping up. And then on a higher price stock, you had Estee Lauder gapping up. So let's just go over these quick, what made these work. Okay, so let's take Estee Lauder. This seemed to be a real winner in the room today, and this was a nice earnings play. And I had, uh, with with the years that I've been trading and understanding stocks and reading earning reports and understanding bottom lines, I felt Estee Lauder did very well today, but I did feel that they would gap fill and come all the way down to 222 to 200, or 220 to 222. I felt that would be the bottom of the stock, and the stock would probably grind around the 222 area. But before the stock would sell off, you would have an initial reaction at the open, and it's a twofold. You got the market gapping up. So make a note of that. When the market's gapping up, and then if the company reports positive numbers, this is going to get short sellers, especially retail short sellers, up a pause. They're going to pause for a moment and say, you know what, I want to get out of my position. So it's kind of like almost like a panic. I need to get out at the open because not only did they have good earnings, I'm dealing with the market gapping up, and therefore I got a twofold against me. I'd rather just get out of my short position that I held overnight into earnings that I thought was going to come down, and I'm just going to get out at the open, which is going to cause what they call a quick short squeeze. It's going to be small, nothing huge, but it is just a pure short squeeze. It's mostly retail or traders from all around the world that are holding positions that kind of want to just get out of those positions and let the stock and move on to another trade. And so what I do is I anticipate that pop out of the gate. Overall, I want the stock to come down to the 220, 222 area. But before it does that, there's no way, in my opinion, based on how I've traded the stock before over the years and understood it and understand the stock, there's no way the stock's going to pull at the open, not with positive earnings. What creates positive earnings? Okay, so what you do, I use what they call briefing in play plus when I'm reading earnings reports. And all you do, I love briefing in play plus, especially when it comes to earnings. So all I do is I punch up Estee Lauder, I come down, I see it's up right here. You can see Estee Lauder gapping up 5%. I know the stock is a $200 stock. So offhand, I'm picturing a 10, 12 point move already. But what a lot of you didn't see too was even though they beat on the top line, they did issue some cautious downside guidance. Now the guidance wasn't really huge. In retrospect, if you're guiding from 173 to 160, it's not that, to me, going to be that huge where the stock is going to sell off. But what countered this and why the stock actually gapped up first was that Estee Lauder announced a 10% increase in quarterly dividend for Class A and B shares at 53 cents a share. This is what investors love, long-term investors. I mean, people that build positions in big companies like this where they receive nice, healthy dividend checks for long-term investments. So Coca-Cola pays it, Estee Lauder, you can go down the list. SPG pays a very handsome quarterly dividend. This is why people buy massive amount of shares. This is where the wealth of Warren Buffett comes in, where Coca-Cola, I think, pays him what, 100, 200 million a year in just dividends, owning the stock, if not more. I mean, these guys make some serious bank. So increasing a dividend from 48 cents to 53 cents, maybe to you and I, it isn't that trivial. It's trivia, but to a shareholder with size, this is really important, and this is a significant. So it did create, since it's a dividend increase, it created that gap up, because that's what investors love to hear. Um, and then the downside guidance would kick on the backside of it, which is where the short came in. So my thoughts this morning, in my opinion, was that Estee Lauder would pop at the open. It would clear 234, probably pop close to 5 points, and then after the short squeeze would sell off to 220, 222. So you as a day trader would say, okay, how do I trade that move? All right, so you come in and you observe the stock make its initial pop, which it did from the gap. So it makes the pop. Then what we have is what we call a lower low sets in. And a lower low, basically, the stock pulls, and a lower low sets in where the stock starts to gradually just continue a down trend. That's what I always look for when lower lows will set in. And right here, you can see the stock wasn't going to curl or break out again. This tells you that the stock most likely, based on my experience, in my opinion, the stock would simply just sell off. Now, where would it sell to? This is the question. Well, you have a mixed earnings report. You beat on the top line. What I mean by that, when you look at the report, this is the top line. You see how it beat by 54 cents? That's what we call a top line beat. However, now you've got the dividend increase, which gives it that push, that extra gap up. But you're also not providing any fiscal year 21 guidance, and the guidance you gave for the next quarter for two is down below than what you told investors before. Therein lies the sell-off. So it's a mixed earnings report. That's what we call mixed. Okay. So now I want to just gap fill the stock pretty much to where it closed. You can see the closed at around 219.66. Based on this report that I read thoroughly and spent, why I'm up at 3:30, 4 o'clock to spend my time to read. Based on that scenario, I felt the stock would come down and therefore give you an opportunity with your account to decide, okay, I'm going to go ahead and short the stock. My my idea was just to let you know where I think the stock would settle. That stock should settle around 220, 222. And as you can see on the stock came down to $220.30. And the stock is trading at 222. See how that worked? And again, to you, I mean, you look at it like this is magic. This is unbelievable. How does one individual is that good where he can call it to that? It's just stunning. Now, if you write this down and put that in your idea, and you remember it the next time, you too will start to get an idea of where stocks will come down, where stocks will settle, and you'll just continue to look at the history, and it becomes repetitious. You know, if the stock was flat, there would really no be a trade for me. I wouldn't even be looking at it. But when you're gapping up $10, $15, I want to play that trade. I want to entertain that idea because I feel the stock will gap down and sell off based on what I read. And all you have to do is read the report. The report will tell you this is how the stock will trade. It just takes time to understand it. Now I'm going to take you into DBVT, a typical small cap stock gapping up. All right. My initial reaction is, okay, DBVT will sell off pretty much every time it gaps up. It's a standard 101 that I call it. All right. Over the history of the stock, and you can do it yourself, you can look over a year pattern. You see every time it gaps up on news, the stock sells off that news. So this is why the stock doesn't run. All right. So make a notation of that. So every time, and what you can do is just go take a 1 year and you can see how many times news comes in. So every time they get news, they sell off that news. They pop it, they drop it. They pop it, they drop it. All right. They pop it, they drop it. It's just they pop it, they drop it. They pop it, they drop it. All right. Here's more. They pop it, they drop it. They pop it, they drop it. Okay. So this is the history. Here's another one. Pop and drop. This is the history of this stock. All right. It can never, never hold its gains. So I study this and study this and study this. So now when I come in the room in the morning, when I'm doing my homework and research for you, I see a gap. Now, before I suggest on my opinion that the stock will sell off, the first and most important thing, now these type of stocks don't care what the market's doing. So I want you to make a notation of that. It's very important you understand that. It doesn't matter if the market's up 700 points or down 800 points. These small cap runners, they trade their own way. If they're in play and they're got a phase 2 approval and everyone loves it, investors are eating it up and got $30 price targets, the stock will run. But in this particular instance, even though the market's gapping up 400 points, I see nothing but a short. And let me show you why. Okay. And so what I do is I look where it closed at 145, right? And I'm looking now. I go read the news. Why are you gapping up almost $1.50? It doesn't. I don't understand. So like you, I go and do the research. So I punch up right here, and I see actually right here on my summary, DBVD announces filing and validation of marketing authorization application for peanuts or peanut. So let's break that down to understand. Okay. Now, in our business, to me, all right, in our business, there are keywords that tell me to short a stock, no matter how much it caps up. There are keywords, and I always spike. They're called word associations, and so I'm tying a word association to the idea: is this a long or is this a short? So I want to read it to you, and I want you to just hear it out loud, and read it, and tell me what words stand out to short this stock, in other words, what makes me think this stock will not go up for the day. All right. So here we go. DBDT announces filing and validation of marketing authorization application for Viaskin Peanut by EMA. There's at least 2 words in there. Can you see it? Okay. What stands out for you to say, this is a short? I mean, there's nothing here. I mean, read it out loud. I'm going to say it one more time. This is for you traders, for all of you in the room, because this is a trade that some of you could have went in with size and made $6, $7, $8, $9, $10, $12, $15,000 today with very little money. Let's read it again. DVTT announces filing and validation of marketing authorization application for. I'm done. I'm done. For me, with my experience, the word to me is filing. Whenever I saw that word, whenever I see filing, you are filing some paperwork. It does not mean you're getting approval. It doesn't mean you're getting a $6 billion contract for your drug. It does not mean the FDA has approved it. It means that you're filing an application. Word association. Now that you understand it and you see really how ridiculous it sounds, why would you long the stock if this was your money? What tells you in this PR that this stock should be up 100% from yesterday's close or 150%. There's nothing here. All you did was file an application. But unfortunately, in our business, a lot of people overact. They don't read the news. I used to be one of those people. I used to lose a ton of money when I came into business. I used to be a loser because I would be one of those that would chase stuff like that thinking, oh, wow, a validation of application to the peanut. Oh my gosh, it's going to probably go to $50 because some dude on Twitter told me it would go up $10 a share. Oh my gosh, I better go long. And then I just watch all my money just go away. But over the years, I have learned there are certain keywords and elements in a PR that tells me this is really no business being up. Therefore, I put on my notes, in my opinion, this stock, number one pick. And why did I make it the number one pick? Because if you can take size and you know exactly what the stock is going to do and how it's going to perform all day long. So hear what I just said. If you know what the stock is going to do, where it's going to end up, how it's going to trade, why wouldn't you want to size in on something like that if it was your choice of stock? And since it's a small cap stock at about $2, I want everyone to have the opportunity. So now we want to basically say this is nothing but a gap fill short. So this also, because of the way I understand things, it prevents you from buying 2,000 shares long and it's just selling off all day. Why would you buy that and lose $500, $1,000? You don't need to waste your money. AJ, you emphasize that our pick are the ones listed for more confident. No, I usually start with the cheaper stocks that everyone can really entertain. Because I believe if you have a small cap stock at $3 and it's going to fade a point and a half, you could put in 10,000 shares or 30,000 buying power and fade 50 cents and make 10 grand. You know what I mean? 5 grand, 8 grand. This is where the small cap rooms that you see out there where somebody goes, I made 8,000 today on that trade. I mean 9,000 today. I mean 13,000, 27,000. Okay, you can do it too. What would stop me for small caps? Let's take this trade for instance now. All right, let's break it down now. So now we come in the room and we see AJ's setup is a short. We all understand that now, right? And now you understand based on the words that it should be a short too. Would you not all agree? Everyone's sitting there shaking their head, right? Now what do we do? How do we set up the trade? Well, if this thing pops to 280 and clears that, it'll run quick 50 cents. What you need to be eyeballing is to see if it pops to 280. If it doesn't even make it up there, it can't even come close, and the lower lows set in, that's your short. Now we have to set the stops, and then we play this. Then we short the stock. So let's set it up now. All right. So here's the opening bell. Market opens. Ding, 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 ding. Here's the open, right? So here it pops. There's no 280. Here's the open. 630, market opens. It pops to 255. So far, no short. So far, no long, correct? Pops again. 257. Again. Now watch what happens. Right here, it popped again. You see that topping? And then the lower low. So as a short seller, what would you do? Lower low, lower low, lower low, lower low. Anywhere in here you can short the stock, Michelle. Where's your stop? Right there. 260. Firm. So you don't get burned. So if you're in at 250 short, 2,000 shares, your risk is 10 cents or $200. Your reward is what, Michelle? 1 point. Did you hear that? Because you know where the stock is going to go. You already know where it's going to go based on the notes. So if you're going to risk 2,000 shares at 10 cents, but you know if you hold the position most of the day, you'll be rewarded $2,000. At the very minimum, you could be rewarded all the way down to $1.85. 185 on 2,000 shares, 5,000 buying power will reward you roughly what? 255, 185, 70 cents. What is 70 cents times 2,000 shares? All by 9:30 in the morning. 2 hours later, 1,400 bucks. Now imagine some of these small cap rooms, right, that are all showing their $26,000 paper trade or real P&Ls, but they're taking size. It's literally insane. I can't believe the risk to reward ratio. That's the struggle, to be honest. The issue is, Michelle, and to all of you, is you never even understood the news. This is what the room is all about, to introduce a whole different way of trading. Are you going to trade the chart or are you going to trade the news? The news tells you that it doesn't justify this move. So this is why you see these small cap stocks just fade all day. This was a perfect example. Let's do another. We had another one this morning that I liked on a short. What was that? Let's go to our list. It's down here. Where did it go? Oh, it came off. Oh, shoot. Where did it go? It's over here. Oh, it came off. Anyway, here it is. That sucks. Maybe he couldn't put it on the page. Okay. Anyway, ANPC. ANP receives COVID-19 certificate. Okay. I have this one to short to 3.25. I was pretty aggressive on it. So in my idea, this was going to be nothing. Oh, here it is. Oh, he combined it. That's what he did. I'm sorry. Here it is. Let me go back to screen share. See right here? There it is. APNC receives COVID-19 certificate. Gapping up. Do not long unless it pops to 470. If it does not clear that, then it would just fade to 3.25. Now, let's look at this stock, what it did for the day. And let's go ANPC. Hey, that's enough. Daddy's working. ANPC. Okay. Now, let's read the stock. Okay. Before we short the stock, let's read the direction. I want you to read the direction of the stock now. Stock is gapping up. You can see that right here. It's gapping up substantial, almost 80, 90%. But why? Now, we're going to play word association. So we come over here and we go, I don't think even Briefing had this listed, to be honest with you, Jay. ANPC. Nope, they didn't have it listed. So I found it over here. This is another scan service I use that anybody can get. It's called Newsware. And all I do is I punch up the ticker, ANPC, and I can read right here on November 2nd, right, the headline. Let's read it together. Here we go. Okay. ANPC, a company in China, received a COVID-19 nucleic acid test certification and began volume tests and collaborations with ANPC Bio. Where is the short? What is the short association? What tells you this isn't a big deal? Let's put it in those terms. What in that headline tells you this isn't a big deal? Newbie, you already did it. Your first day in the room, you nailed it. What is the word? Let's read it again. I want you to think like you're a person reading this. All right? In ANPC in China received COVID-19 nucleic acid test certification, and began volume test and collaborations. What is the word? There's actually two words in here. Certification. Imagine you going out and doing something, somebody gives you a certification. Here you go. Does that mean you're amazing? Does that mean your company should jump 80, 90% in value? Shake your head no. But the key word, began. When you see a word that says began, you're basically looking at that like you haven't proved anything yet. There's nothing there. And then when you go read the headline, you realize there's no money tied to it. There's no added revenue. And the whole reason why a stock moves up is because more revenue is going to come in. There's nothing here that tells you in the headline, revenue increase, value increase. Therefore, there's no value in this headline as far as I am concerned. So in my opinion, let us know when you finish, not when you begin. I don't know what that means. Yes, Margaret. Margaret said it. Let us know when you finish, not when you begin. That's right. Or you're in the middle and you're getting money for it, or you're getting compensated, but you cannot raise your stock, 80, 70, 80, 90% if there's no revenue extra coming in and you're beginning a project. It's like, I'm going to begin to do this. It doesn't even mean you're going to listen to this. Beginning a project doesn't mean you're going to be successful in your beginning to begin with, correct? I'm going to begin this idea. Oh, it didn't work 3 months later. Sorry. You see my point? So therefore, my mind is this is just going to gap fill. So I would like to short the stock with size if I take that play. So you come in and you read the note, and it says clearly that this stock to me will sell off to 3.25. So now you go to the chart setup and you set up the trade. In pre-market, obviously this is amazing because the lower lows set in right away. But 9 times out of 10, it's hard to trade in pre-market and get a short beginning if you don't have the right platform and know the right things. So you have to almost wait for the open. So what do? Well, we want to make sure at the opening bell, which is right here, we want to make sure at the opening of the bell that the stock does not get through what? 470. If it clears that, that is telling me that chat rooms are trying to pump the stock. All these newbies and Robinhooders are buying the stock and trying to push it up, right? Because they all think this is great news, right? And we all know which rooms do that. But a room like ours, we are all in education, teaching, understanding. What should the stock really be doing? It should be selling off. So therefore, if it doesn't clear 470 at the open, consider it a short, lower low set in, and fade it back to 3.25. Now let's set your risk and reward. Come in the room. Now you understand it's a short. Here's the opening bell. Ding, 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 ding. You can clearly see at the open, it could not clear 470. 430 was the top. Pulled down, went back up with buyers and short sellers, and it couldn't even break. There's your lower low. There's your short position. Where are your stops? As we scroll down over here, your stops would be right there, 440. So now we're going to set your risk and reward. You take 2,000 shares short or whatever you feel you're comfortable with in your account. You start shorting at about 425. Your risk is 15 cents or $300 on 2,000 shares. Your reward is roughly 1 point on that money. 2,000 shares. We're already down here 30 cents. We're down here another 20 cents. We're down here another 20 cents, 30 cents. And look where it ended, $3.50. Almost 80-cent return on 2,000 shares, which is equal to about $1,500, $1,600. Obviously, if you did 5,000 shares short and your risk was 15 cents or $650 would be your max loss, give or take, and it popped down 70 cents or 50 cents in the first 17 minutes of the bell, you just scored $2,500 by shorting the stock. You see the nice rewards on these small cappers? If you know what you're doing, it can be very rewarding. And every single day, I will provide these type of plays, at least 2 or 3 of them a day. And this is how the great Jay does every morning. He comes in here, he picks it, small cap only. This is all he does. And look at today, 1,200, 1,600, 1,989. See that? And all he trades is small cap stocks. 1,100. This is his daily. 1,480, 160. This is why Jay's a mod. He contributes. He says, I like this. I'm going to go short. That's his idea. Okay? But it's all in the note. All right, let's do one more trade. Okay? Let's talk about NEO. A lot of people emailed me and thought NEO was an incredible call today. So, first thing we have to do, we got to go find NEO, right? So we take NEO and we realize the stock is gapping up considerably. Okay, look at that. $30.60, and it's already up in pre-market at 1:30 in the morning at $32.80. And then you can see it did a breakout above 33 and ran to 34. Again, we have to ask why. Why is it up? And what will the stock do once it's up? All right. How do we trade that stock? Now let's break it down. First thing we do, we go to the scanners that anybody can use. I go to fly on the wall and I punch up NEO. Why are you up? We are up this morning because we delivered 5,055 vehicles in October, 100% more year-over-year growth. So you basically did 100% more delivery of your vehicles. How do we trade the stock? All right. So now I want you to kind of take a look at something before we start to get into the nitty-gritty. I want you to go back 30 days. I want you to look. Okay. JP Morgan upgraded this stock to 40 back on the 14th. Why did he do that? And it says right here, China's new energy vehicle penetration is set to accelerate from here and quadruple. The analyst tells investors in a research note, in China's smart EV market, the analyst expects NEO to be a long-term winner in the space premium among Chinese brands versus XPEV, which is a stock we traded, leading the mass market. Okay, this was done on the 14th. JP Morgan raised it to 40. So in my opinion, JP Morgan kind of had an idea that some news was coming out. All right, I want you to think what an analyst does in a bank. And let's just say Nick Lay, who's the analyst, this is his job. His job is to study what Neo's potential. So Nick is going to do all the research that he possibly can to determine whether or not Neo is a strong buy, it should be upgraded. So he's going to make some phone calls. He's going to travel over there. He's going to walk the plant. And if he sees deliveries and they're accelerating, all right, and he's noticing this because of what they're showing and the information he's receiving, look at his price target, $14 to 40. Don't you think he knows something that you don't know? So what happens is we get a nice run. Now we're not going to get to 40 yet, but we're going to get a nice run. So that run has already been in consideration. So let's go back those 10 days. Right here. JP Morgan increased it. Now look at the run. 22. We played it for that day all the way up to 30. Remember? For 2 days in a row. Consolidated. And now with the news, it's almost 35 a share. Not much more room to go now, right? Would we all agree with that? Correct? So what I'm trying to get at is you already had a significant move, yet you don't really have earnings out. You just have a move based on amount of cars that have been sold. Do we all agree with that? Okay, so now when I see the stock gapping up in the mid 30s, I'm thinking, you know what? Most we're going to pop to is maybe 35, 36 before it gives back. It could squeeze to 37, but I don't think so. I actually think we've already made a significant move. I'd rather wait for the pullback and then look to buy the stock. So this setup was to me like, I honestly think, in my opinion, I'd be more inclined to short the stock versus long the stock and let it come down to an area I feel comfortable the value of the stock should be. Based on my experience in studying the analysts, I felt the stock should settle around $32 today. So I wanted an initial pop. So those that wanted to long the stock, you needed to break out through this 34.40 right here. You see that? You needed to give above this. Then you can pop it 50 cents to $1, even possibly more. But as you can see, it stopped. It gave traders plenty of opportunity and had topping. Now what happens? The lower low sets in, the lower low sets in. Where do you short? Where do you set your stops? If I was trading this, I would short it right around here at 34.60, 34.40, and my stop would be right here at 34.90. I don't want it to get past that. Then I might lose substantial money if it rips. So the lower lows are setting in, the topping is in, I'm getting a pullback. I'm comfortable that this can come down now. I have to wait most of the morning, but I feel confident the short will set in. This profit taking will kick in off this gap, and I can bring it down to 32 to 32.50. And there I'll go ahead and consider longing it when it hits down there. Where's my stop? 34.90. So if you took 2,000 shares short, you're risking 50 cents or 1 grand. But what is your reward? Can somebody tell me? If you're short 34.50 and you're confident based on my notes and my opinion that this would come down to $32 today, how much money do you make on 2,000 shares? So 2 times 2.5, you basically will make $5,000 on this trade. What is your risk? $1,000. If you did 1,000 shares, your risk would be $500. Your reward could be $2,500 because you're coming down 2.5. Now let's trade the stock. Ding, 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 ding. There's a small push. There's the topping. There's the lower lows. There's the short. And where did it go? $31.68. $32 right here, and it bounced all the way back up. Because to me, in my opinion, this is now the value of the stock. I won't play this tomorrow. There's no need. Unless JP Morgan or B of A or someone comes out or Goldman and says this is worth 50. Now we got to play it again. Okay? But for today, as a day trade, we hit the target of 32 a share. Again, traders, whenever you're coming in, you're evaluating things. You're thinking. You have to think. How do we know if the stock will go up 50 cents or whatever? Because the note said if 34 could go to 1 and 2. I just showed you. You have to study the chart, Michelle. You already see a topping. It's not breaking out anymore. The lower lows set in. This is where you have to study the chart. It's breaking down. What is your risk reward? Your risk is right there. Because if it breaks out over here, the stock could go up potentially. But if it doesn't, it breaks down again, chances are it won't rip. It's just a selling off on profit taking because the stock already ran a significant amount before this news even came. So all this was just profit taking this morning. Now, was it going to gap fill? I didn't think it would. I just kind of was looking at it and I'm like, you know what? I don't think it'll gap fill. But I can, and remember my little secret I always give, Michelle, and to all of you? When it first started to open and trade, where did it pop to and then make its move? Right there. And what is that area? 32. I want you to go across now and draw a line. Look what it did. It filled that mark. Every morning, every day, I studied those marks. And there lies my call. So obviously, if I got you 32, but it gave you another 30, 40 cents, good for you, right? But you can see right there, there's your secret sauce. So this is today's lesson, all right? This is today's recording. I want you just to constantly make notes of characteristics of these type of stocks and what they do and how they react, right? Based on my opinion, and all this is my opinion what the stocks will do. And what you look at is just like, wow, he's so accurate. That is because I've studied these stocks more than you could ever imagine. I study charts, I study trends, I study analysts. This is where my 15, 16 years of my life comes in to understand. And then I analyze where the stock should end up. I share it with you and my thoughts. And there you go. Okay. Just keep studying, keep asking questions, keep listening to webinars. The more you reach out, the more you learn, the more you can potentially earn. But you've got to understand where the stocks, how they're going to trade before they even start trading at the open. Okay? And that is today's recording.